It's going to be the first time that Jio will have paid a fee for its earlier owned tower and fiber assets. Sumit Sarkar is here with the details and what should one watch out for. Sumit, this act is bound to take a toll on its numbers.
Well, yes, it will take a toll on the EBITDA and the net profit of the number, but the company's revenue is expected to be higher by nearly 8% compared to last quarter to close to 12,000 crore rupees. The EBITDA, as I mentioned, is expected to be down by nearly 15% to close to 3,700 crore rupees. The margins are expected to slip to close to 30.6%, while the net profit of the company is expected to decline by nearly 4% to close to 800 crore rupees. However, the company's average revenue per user, that is a key number, is expected to remain flat at close to 126 rupees per user per month. Now, as you can see in this chart, this will be for the very first time the company's net profit margin is expected to decline to close to 6.7% from 7.6% what the company earned in the fourth quarter of financial year 2019, and that is because the company will now start paying for the earlier owned tower and fiber assets. Now, because of this demerger of the tower and fiber assets, they'll have to start paying to use those assets, and that's the reason the company's net profit margin would slip to close to 6.7%. However, the company's revenue now that is expected to increase because of the strong subscriber additions that we have been seeing. Now, analysts are expecting Reliance Jio's subscriber base to be close to 33.2 crore. That is a net addition of close to 2.5 crore subscribers in the first quarter of financial year 2020. Now, largely the analysts are expecting the company's ARPU to remain flat, but that could well be on the lower side if the company has added more JioPhone subscribers, because these subscribers come at lower rental, which could lead to further ARPU dilution for the company. Now, as I mentioned, the company's EBITDA is expected to decline because of this asset transfer, but on the net profit side, the impact would be lower because the company's depreciation and interest costs would also be lower because of this transfer of assets. So, though the EBITDA would decline by nearly 15%, the net profit decline is expected to be only 4% compared to last quarter. Now, the key things to watch out for from Reliance Jio earnings would firstly be the cost structure of the InvIT. So that will be the most important part to watch out for from this earnings. Along with that, any clarity on the InvIT valuations and the revenue structure would be the second important thing to watch out for. Along with that, any change in tariff plans that the company is planning to do going forward will be also important. Along with that, the capital expenditure outlay for financial year 2020 and management commentary on Jio Giga Fiber rollout and their debt reduction plans will be important to watch out for from Reliance Jio earnings today.
Okay, but Reliance is not only about Jio. What about the other segments? Sumit, how are they expected to perform?
Well, the refining and the petchem, there's another important segment for Reliance Industries. I'll start off with the standalone numbers, which reflect refining and petchem. So, the standalone numbers, if you see, the company's revenues are expected to be higher by nearly 4% to close to 86,700 crore rupees. The company's EBITDA is expected to decline by nearly 1.6%, close to 13,500 crore rupees. Margins are expected to come in lower at close to 15.5%, but the net profit of the company is expected to be marginally higher by 0.7%, close to 8,618 crore rupees. Now, the company's gross refining margin that is expected to be marginally higher at close to $8.3 per barrel compared to $8.2 per barrel reported by the company in the fourth quarter of financial year 2019, but that is because the Singapore gross refining margin, that is the Asian benchmark, that averaged higher at $3.5 per barrel. But if you see the company's premium to the Singapore gross refining margin, that is expected to come in lower at $4.8 per barrel, because of which you can see clearly the refining segment is expected to be weak for the company. Now, the petrochemical segment that is also expected to be weak because of lower product spreads that we have been seeing in the first quarter of financial year 2019, now 2020. Now, if you see, however, some of these negatives of the refining and the petchem business would be offset by higher volume that is expected both from the refining and the petrochemical segment. Now, the net profit of the company that is expected to be marginally higher because of lower interest cost, higher other income and foreign exchange gains that is expected in the first quarter. Now, on the upstream business that is expected to remain weak for this quarter also, and the retail business is expected to see a continued surge in its EBIT in the first quarter also. Also, the retail business would see a kind of bump up because of the applicability of the Ind AS 116. So that is one thing we need to watch out for from retail business earnings. Along with that, we'll also need to watch out for the company's guidance for the GRM outlook that the company is seeing ahead of the IMO regulations which kick in from 1st Jan 2020. Along with that, any update in the petcoke gasifiers plans will be the second important thing to watch out for from Reliance Industries standalone earnings today.